Joining me now is Steve White, who's the CEO of Harvest Health and Recreation, Inc. They trade on the CSE under the symbol HARV, H-A-R-V. Steve, how's it going?
Very good. Thanks for having me.
Great. Well, thanks for coming on. Yeah, we haven't had you guys on before, so we're going to give people a little bit of an idea of what Harvest Health and Recreation is all about. The first thing that jumped out at me is you guys have been ranked as the third largest cultivator in the U.S. of cannabis.
I did see that. That was a publication that measured people's cumulative square footage. Not sure if it's accurate or not, but that was the conclusion that they came to.
That's fine. But so just to give people an idea, what is your square footage that you're cultivating? Is it spread out? How does that work for your company?
It's spread out all over the United States, and so we measure it. We have outdoor, we have light deprivation greenhouse, and we have indoor cultivation in multiple states. We actually have a total of 32 U.S. licenses to cultivate cannabis. So we've got projects ongoing all over the place.
Yeah, and another bullet point here that jumped out at me is 140 facilities across the U.S. So is that sort of cultivation, some of it's dedicated for other business activities?
Yeah, that's a total number of licenses to have facilities across the U.S. So that would include licenses. We have over 80 licenses, over 85 licenses for retail. We have over 30 licenses for cultivation. We've got over 25 licenses for production, and we've got a few distribution licenses in California as well.
Okay, great. And what would you say, comparison to other multi-state operators, which is sort of the buzzword now, what kind of separates you guys from the pack?
A lot of things, actually. First and foremost is the way that we have acquired all of those licenses. Up until this summer, we as a company didn't raise much money, and so we got into 9 states with a total amount of invested capital of only $18 million. Anybody at the time who had a comparable footprint would have spent at least 10 times that to get there. So we've been really good stewards of capital. We've been able to do that because we've developed an expertise in competitive application processes, and we've been consistently profitable as a company, which is something that's unique in U.S. cannabis, actually cannabis anywhere.
Wow, yeah, that's pretty impressive. Just looking at your last couple of press releases, you opened recently on the 12th of February, first dispensary in Florida. So that's ramping up the competition. There's some large operators there as well.
Yeah, most of the large U.S. operators do have a license in Florida. I think there's only one that isn't there yet. So that's going to be an interesting battleground for years to come. Give you a really good idea of how well and how effective the different MSOs operate.
Yeah, and again on the 12th, I can see you opened your 9th dispensary in Arizona, which is sort of your home state, I guess is the way to put it. Is that you started out as a company there because that's just where you're from, or how did that come about?
Yeah, that's exactly right. It was in 2010, Arizona passed a medical marijuana law, and me and a couple of guys saw an opportunity, and we sought out to try to get a license in Arizona. We ended up getting 2, and since that time started to see states pass medical marijuana laws and saw an opportunity that we didn't think we could pass up. So we got very good at growing as a company. Not growing the cannabis, but actually growing our footprint.
Yeah, and if you don't mind, would you be able to speak to the share structure of your company, just so investors have an idea of what that looks like?
So the bulk of our shares are held by insiders, which is, I've actually heard recently people be critical of that, which I think is quite odd because the decision makers in our company are directly aligned with anybody who buys shares. So when we make decisions, we there's no question that those decisions are being made in the best interest of shareholders. And it's somewhere in the neighborhood of, I believe, just over 80% is held by insiders. Because we didn't raise money a lot, we didn't take a lot of dilution going into our RTO that we did in November.
Yeah, no, nobody over here would complain about 80% ownership, that's for sure. In fact, that's something we constantly look for in people that we're interviewing, because to us that's a value add for sure. Let's move to you. On Valentine's Day, acquired California's Falcon International Corp. Was that a sweetheart deal?
Nice. It was it was a sweetheart deal, and it was one that we've been working on for so many months. It feels like the culmination of a lot of efforts. When we did our roadshow in October, we told people that we were going to acquire a company that has demonstrated success in distribution and manufacturing in California, so that we could ramp that up for harvest and get some of our brands into the state of California, which we think is critically important. We were hoping that acquisition would be Falcon. And so we would consider it a sweetheart deal because of how important it is for the development in California and harvest generally.
Yeah, and I mean, I've mentioned this a number of times. You mentioned California is a critical state to be in and thrive in. It seems every week we're seeing headlines about other states either decriminalizing, or there's medical now, or rec. What's your strategy for the rest of the year, and how do you feel things are going in terms of on the federal level? How will that affect your business operations?
The biggest catalyst for U.S. stocks, I think, that we've ever seen is probably going to be the passage of the States Act. And what it does for us is a couple of things that people often talk about, which is alleviate some of our federal tax burden and provide easier banking access or traditional banking services for our businesses. But what people aren't talking about enough is how much U.S. institutional capital is not able to play U.S. cannabis. And so with the passage of the States Act, you're going to see that as a catalyst for the New York Stock Exchange and the NASDAQ to permit its listed companies to invest into something that is no longer federally illegal. It is in states that don't, it would be in states that don't choose to regulate, but the investments that those companies would be looking to make, and that the different U.S. institutional capital would be looking to make, would be in companies that only operate where states choose to regulate.
Right. No, that seems critically important. Looking out through the rest of the year, what are some milestones that the company's looking to achieve, or what can investors use as sort of a yardstick to determine if Harvest Health is executing?
So obviously, execution ultimately comes down to a question about earnings. But there's a foundational element to not just earnings this year, but earnings far into the future. That foundation will be the development of a very extensive retail footprint across the U.S. So you will see us continue to build that retail footprint. In addition to that, you did see us acquire a company, CBX, the parent company to Evo Labs in Colorado. So you will see us start to produce the products developed by that company, along with the brands that we had going into it, and spreading them across that footprint, that national footprint. And so with the Falcon acquisition, obviously you see some of the development of the infrastructure for the manufacturing and for the distribution. That CBX acquisition provides us with a number of the products that we're looking to produce across the country. Now it is up to us to continue to develop the leading footprint in the U.S.
Awesome. Well, thanks, Steve. That's a great introduction to the company. I'm certainly going to look into it a little bit deeper, and I'm sure our viewers enjoyed seeing you on the show. So thanks again, and we'd love to have you back in quarters time and see what else is new.
That sounds great. Be glad to come back, and appreciate you having me.
Great, thank you. Cheers.